And so, where do I see the real estate market going in 2025? Well, I mean, there's a number of different things happening. Obviously, over the last couple of years, we've all experienced essentially contractions in the real estate market. There's been a lot of pullback, and a lot of that is driven, obviously, due to the Bank of Canada policy rates. Increasing the interest rates has really affected a lot of affordability, and with that, valuations. As we're seeing currently, as far as like the sales go, sales have slowed down significantly. Uh, the biggest impact, I would say, in real estate as a whole, for Canada has been the as far as like the commercial market goes, offices are have still not recovered from COVID or COVID era. A lot of companies are trying to mandate work back to work legislature, but um, it's still not. It has still hasn't been effective in that sense, and so we're still seeing in terms of commercial that segment is still hard hit. Valuations are coming down, rents are coming down significantly, vacancies are increasing and continuing to do so. A lot of companies that had permanent office space have switched more to a flex model whereby it's they have shared desks rather than permanent seating positions for all their employees. And I think that's going to remain so for the foreseeable future. From my understanding, is the vast majority of companies have uh, gotten their employees back to work, but as far as everything goes, it's not 5 days a week. Some are doing 2 days a week, some are doing 3 days a week. Very rare that you get 5 days a week at this point. And so this is the situation there. With respect to residential side of things, I think, as far as everything goes, we're still going to see, you know, um, decreased demand. But now it depends on what segment you're talking about. Condos have been hit quite hard. Um, and, as you can see in the news, there's a lot of projects have been essentially shelved or delayed due to lack of interest from buyers and investors. And at the same time, condo valuations are coming down. They're appraising down. And so you're having a lot of turmoil in the assignment market. Demand for condos has gone down. Coupled with that, due to inflation, um, we're seeing is that there is escalation in maintenance fees, and so in some cases, maintenance fees are reaching a dollar 20 per foot right now, which is becoming unaffordable for the condo market. It's not making sense for a lot of people to get into that market segment. Uh, but for instance, the single family or call it the low rise segment, although we're seeing some corrections in that space, I think that market is going to remain strong for the foreseeable future. Units are going to sit on the market for longer, but they will sell, and they're probably going to sell um, at higher prices than we're all expecting. You see, what happens is that with respect to that market, when you're talking about, for instance, the GTA, essentially the government has mandated that they want to see more density development. And so for individuals who want to own more, single family sprawl style developments, that segment has become commoditized. So for those who want that style of living and can afford to, they're still going to continue bidding on that segment. And then, in addition to that, that's for our market here and call it, the GTA or Ontario as a whole. But I mean, if you look to other markets such as Alberta, for instance, Calgary, Edmonton, and the surrounding cities and towns there are still very hot. Things are, we're still seeing a lot of cost escalation, a lot of property appreciation happening there. And I think it's going to continue to do so for the foreseeable future, probably well into the tail end of this year. Um, but eventually their prices are going to get to a point where they're almost at equilibrium with our GTA market over here. Um, again, there's a lot of policies that are gonna dictate where things go. I think the Bank of Canada has no choice but to continue cutting interest rates. And so that's going to restore some affordability. The thing is, however, um, I mean, we are very much in, call it a recessionary environment where there's a lot of job losses. And so although properties are going to be more affordable from a financing perspective, do people have the liquidity or the income to purchase? That remains to be seen. Um, yeah, there's a lot of different factors. I mean, as far as everything goes, it's a very open-ended question, but I'd really like to hear some opinions from the audience if possible.